Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Monday, the 1st of February. It's slightly on the thin side today, but starting off with one of the more difficult challenges in the market in the small cap area, Asiamet Resources. We've had the bull trap through 6 pence. We had the fake base around the 200-day moving average earlier in the middle of last month. And now we've got the shares tinkering around the old August support area around 2 pence. Obviously, the way that the shares have behaved of late, this could just be another fake base, and then we go down to the next support, sub 1 pence. But the glimmer of hope here is provided by bullish divergence with the lower low for the end of January, not accompanied by a lower RSI trace, so that's sort of good. Also, if we get an end of day close above Friday's peak at 2.1 pence, we could have on our hands a key reversal to the upside, which is a technical buy signal as well. But the moment, maybe allowing the shares to push a little bit higher, a little bit further towards 2.5 pence, and maybe breaking that resistance line, the RSI resistance line at 25 plus might do the trick for Asiamet. But the normal rule is that when a situation is difficult, you avoid rather than try and take the challenge. Next up, a stock which has actually behaved itself very well in the past. It was had a great rally at the I suppose the middle over the summer of last year. Adriatic Metals gap through resistance at the beginning of July and never really looked back. Since then, we've been in consolidation mode, but all the while above the 200-day moving average at 108 pence. And the current setup here is that we've gapped through the January resistance at £1.32, an end of day close or a weekly close above that could take the shares up towards £1.80, which is the top of a rising trend channel from the end of 2019. Time frame on that as soon as the end of next month. Another perky looking situation is coming up in the form of Corero network. Here we've had a great long candle through previous January resistance, it makes for a good start, obviously, and above 14 pence, that peak. Then we're looking towards the 23, 24 pence area over the next few weeks. In fact, we could see much more than that, given how strong the setup is here. Basically a sort of cup and handle from October, a cup and handle breakout from October. The other plus point to note is the way that the shares gap through the 50-day moving average in December, and then that was really the starting gun for the latest move here. So when you see a gap, recent gap higher, where there's either a fill and then a rebound, or it's unfilled, then you know you're in a pretty strong looking situation. For those who 23 or 24 pence is not enough, the next or the longer term target here would be towards 40 pence on a 2 to 3 month view, which is a June resistance line projection. And as I said, with those gaps there and the accompanying positive setup, it looks as though we've got a stock which is in that kind of camp. Obviously, the Reddit brigade have been picking on silver allegedly, and here we've got Fresnillo, which has managed to let's say elephants don't gallop, but this one actually has galloped. It gapped down mysteriously at the end of last month through the 200-day line, and then gapped up again through it. The reason for being bullish even with that gap down was that the shares gapped down through a rising 200-day moving average, and when you have a rising 200-day line, then you basically have to give the benefit of the doubt to the upside, as we saw recently with Eurasia. Also, looking back at the Fresnillo chart, you can see that we've had gaps through resistance, especially in May, which basically started off this bull run and also gave us the message that this is a very bullish situation, even if there were to be future retracements. The best way to play this now probably is to regard this as a buy towards the top of the rising March trend channel from last year at £16. And that could be hit as soon as the end of next month, especially while we hold above the 200-day line at £10.71. Stock which worked well on a technical basis of late, and I suppose on a fundamental basis as well, was Genedrive. And bearing in mind that one of the favorite setups is gap through resistance, then this is very much in play now. The resistance in question was 60 pence, which was post-November resistance. We held the gap. We didn't actually even fill it after two, even though we had two days at attempting to fill it, which is great. And the message now is that while we're above 60 pence on an end-of-day close basis, looking towards the 200-day moving average rising at 95 is the initial target over the next maybe week or two. But going forward, this is looking like a broadening triangle with a 200 pence price target. I would back that rather ambitious sounding target while that gap remains unfilled. So while that remains unfilled, looking like this could actually achieve the best ambitions of the bulls, especially today where we opened at the low and currently at the high. So that's another positive candle plus point as well. One of those situations which has been hidden in plain sight for some months now is Jubilee Metals. Here we had the gap through resistance in October, and then another gap through resistance in November. So that alerted us to the idea that this could be a multi-bagger situation. And current situation is that we've bounced off the back of a bear trap from below the 50-day moving average at 11.3 pence, above the 50-day line, looking for 16 pence over the next few weeks, maybe by the end of next month. But this does look like a situation where you can apply the more bullish of targets, and at this stage probably a resistance line projection from November heading towards 22 pence or 23 pence would be the level to go for as soon as the end of next month. No, there's a lot of fans for the next stock, Oriole Resources. If it comes through, here we've had a bounce off the floor of, just above the 20-day moving average at 0.96, and also the floor of the recent bull flag. It's looks like a mid-move consolidation, which suggests that we should hit the top of the rising trend channel drawn from November 2019 over the next 2 to 4 weeks. If you're cautious on the stock, maybe you'd wait for an end-of-day close through just above that 1.35 double top that we had in the middle of January. That should trigger, a break of that should trigger 2 pence relatively quickly, and actually probably looking for even more than that. It's a very strong looking chart. So for February up to 2 pence, but maybe by the end of next month up towards 2.5 pence, and hitting the top of that particular trend channel that I have just drawn. Stock which is also looking quite constructive at the moment is OPG Power Ventures, just breaking the initial January resistance, which was 17.5 pence, so above that on an end of day close basis, looking for the top of a rising April trend channel at 30 pence by the end of next month. The plus points here, I suppose, really the clean break of the 200-day moving average in November, and then the very strong break of December resistance at the end of that month, and also the way that we've started off February with a break of last month's resistance, which clearly shows a strong technical message. Stock which I'm just literally highlighting because I saw somebody mention it on Twitter. A bit of a bottom fishing situation, but perhaps no harm in that. We had the strange spike in Plutus Powergen last month towards 0.08 pence, and then the retreat, which presumably flushed out anybody who was a weak hand in that situation. Recent days have seen a crawl along the 50-day line at 0.003, which is normally a good sign, but probably want to see an end-of-day close through that September resistance line projection. That's around the 0.004.5 pence level if you're into such micro-priced stocks. And if we get that, then the big picture target here, maybe on a 2 to 3 month basis, is 0.14. I suppose for the cautious trader, you want to see at least a weekly close above 0.005 there, which is the 200-day moving average. But it does look like a base has been built for Plutus Powergen. Stock which is, again, because we're on a quiet day, covered and is giving a decent message is Parity Group. We've had a gap through resistance, which does suggest that finally we're on our way to the upside. That resistance from the beginning of 2020, late 2019. The target here, I haven't checked out the spread, but the target here, if the spread isn't too great on this stock, is up towards 23 pence, which is the top of that 2017 price channel, hopefully by the end of next month. Just a couple of stocks to go now. First one is revisiting a positive situation, which shows you how good gaps to the upside can be, gaps through resistance can be. Here we got PetroNeft, where I think I covered the stock on the day after the gap through resistance at around the 0.7, 0.8 pence level. I suppose it was 0.7 pence, the initial January resistance. So we've not far off to doubling that particular share price. Another gap through resistance now to start February, so that does suggest this is a very strong situation, multi-bagger situation, and the target here now up to June 2019 resistance as high as 2.25 pence by the end of next month. Finishing off with a stock which doesn't get much airplay, but has at least been loyal to the support line there from March last year. Sanleon Energy, support there at 22 pence, and then last month around the 21 pence level. Somewhat a play on the Barry Rowe situation as well, but looking for a break of that August resistance line there at 25 pence. If we can break that, it's up to 35 to or even 40 pence, which has been the call here for the best part of a year. So let's see if we finally get off the ground or off the recent base for Sanleon. That's it for me today. More updates tomorrow.